Hello, you're watching News.Markets. The next few weeks for the oil industry could be brutal, with oil prices persistently low, half of what they were in mid-2014. Oil and gas fields around the world are not worth what they used to be. Even before all the majors have reported quarterly earnings, we've already heard of about $6.5 billion in asset write-downs. The big four, BP, Royal Dutch Shell, ExxonMobil and Chevron, are not earning enough to cover expenditures, share buybacks and dividends either. Well, as oil firms brace themselves for oil prices to remain low, Josh Mahoney, markets analyst at IG, thinks prices could recover this year. Thanks for coming in, Josh. Talk me through why you have that point of view.
Well, ultimately, what we've seen in terms of US crude, so there's two types of crude. You have Brent crude and you have WTI, which is US light sweet crude. What we've seen in terms of the US crude is that actually it's been essentially range bound just from a technical standpoint. We haven't seen it break through either $43 or $51. And every time it gets to one end of the spectrum, it just goes to the opposite direction. Now, what we have seen recently is actually we've seen a bounce from the lower end of that. So we've seen it from $43. As soon as price action came to that level, we've seen it move quite significantly higher. And that actually preceded the release of the crude oil inventory numbers coming out of the US, which actually saw a continued build-up. That would ordinarily be negative for oil prices. But in the face of something that should be negative for oil prices, we've seen continued strength. And that's what makes me think that we're actually going to see, maybe over the next few weeks, certainly a move towards the upside in terms of oil prices and move back towards that $51 mark.
And will that upside last? Because that's not what the majors are anticipating, not until mid-2017.
Yeah, I think ultimately you've got a number of forces, obviously Saudi Arabia, who don't want it to necessarily last. They don't want the oil prices to go back towards the upside until we actually see a number of these smaller producers over in the US flushed out. So I don't necessarily think we're going to see any sort of significant move towards it. I don't think we're going to get anywhere near $100 anytime soon. But certainly it's a case of, when you're looking at individual stocks, they will typically react to the direction of oil prices. So what we've been seeing is, as oil prices are falling, everyone has lower expectations for how much that oil company is going to earn. So when we start to see some sort of strength, or at least some sort of stabilization in terms of oil prices, you would think you'd see a stabilization in terms of the prices of some of these different big oil players.
But what about potential for investors? How can they trade this right now?
Well, it's a very volatile market. I don't necessarily think that right now I would be buying into an oil price or into an oil company with a view to only hold it for, say, a month or so, because we don't know. We could see oil prices flush back down to $40, $35. But I think in terms of these oil companies, they've been around for a long time, and they're well-established firms, and they are currently cutting costs. That cost cutting they're spending money to cut costs at the moment. But going into the next earnings reports, you will see actually that really bear some sort of fruition essentially, and you'll see them benefit from that. So I think in terms of a long-term play, oil companies as a whole are actually likely within, say, 2, 3, 4 years to actually really benefit, and people probably see the current levels as being a bargain, because we are essentially at a point of crisis right now for oil companies. I don't necessarily think it's going to last for more than, say, 2 to 3 years.
Josh Mahoney from IG, thanks very much.
Thank you.